Good evening, everyone. Welcome to Asia Society Hong Kong Center. I'm Rana Chow, a trustee of Asia Society here in Hong Kong. I started out as a friend of Asia Society many, many years ago, before we had the privilege to be housed in these beautiful and historical premises. One of my joys, not jobs, as a trustee is to promote what we offer to support our mission and purpose of navigating shared futures for Asia and the world across policy, arts and culture, education, sustainability, business, and technology. Programs like the one we are hosting tonight are a huge reason why I continue to support this organization and the work it does. Asia Society is all about providing a platform where people can come together to hear from different perspectives, engage in discussions, and exchange views, address complex and challenging issues, and collectively identify creative solutions. Tonight, we are very honored to have Dr. Wang Tao, Head of Asia Economic Research at UBS Investment Bank, to discuss her book. Let me hold it up for you to see. Making Sense of China's Economy, a very timely and relevant subject indeed. Dr. Wang is a renowned research analyst on a wide range of topics, including US-China trade disputes, supply chain shifts, the property bubble, internationalization of the RMB, to name a few. We are also delighted to have Ms. Helen Zhu, Managing Director and Chief Investment Officer of Trinity, the financial investment arm of Nanfeng Group, with us this evening to direct the conversation with Dr. Wang. Let us give a very warm welcome to Dr. Wang and Ms. Zhu as they come on stage and kick off the dialogue on China's complex economic structure, its evolving issues and contradictions, and some of the main features of this most puzzling of global economic powerhouses.
Thank you so much for that warm introduction, and thank you everyone who's present today for taking the time to come join our book talk. So I'm very pleased to be able to have this opportunity to direct and chat with Tao. So for those of you guys who don't know Tao as well as I do, so Tao is an extremely renowned and well-respected economist focusing on China, but also Asia. She's been with UBS for 15 years as the Chief China economist and Asia economist, prior to which she actually held a number of very illustrious previous positions at places like IMF, at BP, at Bank of America. Tao was educated at Renmin University in China for her undergraduate degree and got her PhD in economics from NYU. She's part of the Chief China Economist Forum. She has published countless papers. She has a column in Caixin magazine in China, and she's frequently quoted by the media in onshore as well as offshore, and frequently appears on TV as well. So I'm sure those of you guys who follow Chinese economy are no stranger to Tao. But I specifically feel very fortunate that I can call Tao a personal friend for over a decade since she's been in Hong Kong and at UBS. Initially, it was really mainly through work, as I was learning a lot from the Chinese economy from her. But over time, we also developed a personal friendship, and I continue to learn from her about all of life's important lessons, like how to educate your kids and how to deal with the multicultural challenges. And she's been giving me a lot of great advice that's really helped me in my work as well as in my home life. So very, very grateful.
You're so kind.
We've had the opportunity to travel to China together and see people together and really just explore all sorts of different topics together over the years. So it's really a special opportunity for me to be able to chat with Tao today. Now, I would say over the last 15 years, right, so the Chinese economy is always a topic that is very, very controversial, and it's always burdened by many extremes, right? So at certain points in time, you have love for the economy and the markets, and other times you have hate currently we're kind of in that hate stage, I think, at the moment. People talk about China fondly as a growth engine, as part of the BRICS, 10, 15 years ago, or even recently during COVID, where China's economy grew faster than many other parts of the world. But, many times people talk about the Minsky moment as well and all the challenges that China faces. There's the reform potential, but also the cyclical challenges that we can never forget about. There is the view that the government is too leftist, and then there's also the view that the government is, too laissez-faire, and there's inaction, and they're not actually doing enough. So certainly China is a controversial topic that's full of extremes and contradictions. So I wanted to start out by asking Tao, you've been answering these questions for, 20 years plus. So it's a very tiring job, and, you have such a busy schedule at work and in the home. So what prompted you to write this book, and, what were you thinking about achieving with this huge endeavor?
Thank you. First of all, thank you, Rona, and then thank you, Helen, for that very generous introduction. It's my pleasure, my honor to be here in this beautiful venue to share this discussion with you. Yes, I have been a China economist most of my professional life. At UBS is now my 16th year. I'm probably the longest serving investment bank China economist by now. So through answering these questions from all over the world on every aspect of China, I think one thing I learned is that some questions don't really change. And for example, when's China going to hit, the stumbling block? When is China collapsing? I remember there was predictions of China collapsing already 20-some years ago. China's property bubble, China's debt problem, the rebalancing, and so on, so forth. And so I think it's worthwhile to put down more in-depth answer and in the book, because investment bank report tend to be quite short and people are more short-term focused. The second thing is that in the last few years, I noticed that the narrative of China's story about China's economic success seems to change. People sometimes forget about history. I remember the days, I think in the 80s, 90s, it's very clear that people thought China is growing fast because of the reform, because they're opening the market, opening to foreigners, and because of the cheap labor that people worked very hard. But later, especially during and quite after the financial crisis, people start to, both in China and outside China, start to talk about the advantage of the system, meaning the state-controlled system. And there's a lot of focus on that, including on industrial policy. Seems to forget the origin of this reform. And then lately, there's a lot talk about China's borrowing or stealing technology from others, and that if this is ending, if there's restriction, how is China going to grow? I think I wanted to use the book to bring back a bit of the history, especially about what has been the key triggers and driving factors of this China's rapid growth in the last 4+ decades.
That's a lot of ground to cover, indeed. So let's start from the beginning, right? So obviously, China used to be a very kind of closed economy, very socialist, communist, etc. And it was really only in the late 70s that things started to change and actually picked up in the early 80s. So I think one of the early things that you touch upon in your book is really like what happened in the early days, right? How do we actually go from a very much state-planned economy where we all have like food stamps and everybody gets paid, I think something like, 40 RMB per month equally, to really, having a quite vibrant economy by the end of, by the turn of the century. Can you talk a little bit about, what kind of things happened during that period and what kind of foundation that built for the economy for the subsequent phase?
Yeah, thanks. That's a very good starting point. I think when we think about the state's role, the government's role in the economy, and also about whether, about a lot of debate whether China is still a developing country or a very advanced country and so on. It's always good to go back to the starting point. For me, the starting point is really 1978, when Deng Xiaoping, started the era of reform and opening. And so one thing with that era, I think the arguably most important reform of China at that time is really the agricultural reform. And that really entailed giving people back their rights to use their land and their individual decision making to decide what to produce and at what price to sell and so on. That's a very fundamental introduction of market forces and individual incentives to the people. But that, I think, again, come back to, I think, some of the misunderstandings or misperceptions about China's reform. That was not dreamed up by Deng Xiaoping. That was contract signed by 18 farmers in Anhui province, risking their life and writing down in, with their hand, stamp to saying if anything wrong, if the officials fought them, they are willing to go to prison and so on and so forth. And so, that's the most important reform. So two things. One is, the release of market forces, and individual freedom and incentive. The other thing is that a lot of the reforms came from the ground, from the bottom up. So we shouldn't focus too much on, what the top leaders think. We have to think also what the people think and want. And those other forces continue to move things forward. So after the agricultural reform, then it's, I say it's the most important reform because that meant that people are no longer starving. They can feed themselves. That also means there's excess labor from the countryside that can go to industry, that you can move to urbanization and industrialization. So when China then opened, established special economic zones and had Hong Kong entrepreneurs going to China and so on, you had excess labor able to go to work for those factories and so on. So, it all started from there.
So basically a transition from state planned and organized production to faster efficiency and more output, and then the farmers, I guess, were able to enjoy the fruits of their production. So if you work harder, then you get more, and if you work less hard, then you get less. So I guess the first steps of capitalism to some extent.
Yes. So I would say market forces more generically. But the second stage of reform then was about urban reform, which is really about giving similarly more market incentives and pricing freedoms to companies, to enterprises. At that time, China started with almost 100% state ownership. So that's why when people talk about the advantage of our system, I would tend to want to remind them that government control was not an advantage, right? We used to have 100% government control, 100% planning, and our economy was stuck. And it's precisely that release of that control, giving companies their incentive and also give them the rights to do what they can decide on, what kind of products they make and what people want, so they can produce what people want. That spurred that growth initially. And then after that, instead of directly privatizing these companies, what China did was really an indirect privatization in the sense that allowing private companies to grow. And as private companies are more vibrant, they grew faster. So as a share, they became bigger. So it was not a direct, privatization, but it's really sort of, indirect way for China. It's very Chinese characteristic.
And so with Deng Xiaoping's Southern Tour, which really kicked off a lot of these more proactive reforms, then you mentioned the special economic zones, but I think another important area that was covered in your book is really talking about foreign investment, right? Do you think that played a significant role, or how would you view that in the early days?
In the early days, I think the foreign investment definitely played a very important role. It's in the beginning, of course, China lacked capital, but more importantly, they lacked know-how. They lacked the ways to know how things are supposed to work and supposed to function. Also, having been closed for more than 2 decades, they don't really have much understanding of how foreign markets and international economy work. So by introducing foreign investment, allowing foreign investment, starting with special economic zones, they were able to have a controlled experiment, right? Not affecting most of the country, but only in controlled zones to see how things work. This was in the 80s. Reforms the first stage of reforms kind of petered out in the late 80s, but Deng Xiaoping's southern tour in 92 really kick-started the second stage. And the second stage reform, to some extent, are more fundamental. In the beginning, it was about incentives. Let's keep the planning system, keep the socialist stuff. Market was just a complement. But from the 90s, early 90s, and the party Congress wrote Socialist and Market Economy, which formally acknowledged market and socialism can coexist. You can have capitalist ways with the socialist regime, and people no longer worried if I hire too many people, I will be considered if the private enterprise is too big, they will be considered not the right thing. Okay, there's a little bit of nostalgia maybe in people recently, but at that time, I think the major change in the party's constitution gave political cover for fundamental reforms. They start to set up institutions of commercial banks, capital markets, and also, major nuts and bolts of what a market economy can function.
It was a really dynamic time for sure, right? So things were happening very quickly. A lot of it was kind of trial and error, doing it in a certain location first. And then if it works really well, then basically rolling out. And, even several decades later, China still uses that same approach in terms of testing out many different types of policies, right? So, growth was very rapid. People got wealthy. For the first time in a long time. As Deng Xiaoping said, some people can get wealthy earlier than others,
first,
and they did. And things were really progressing very fast, and China's overall GDP per capita really accelerated, and China started to really exhibit a lot of strength on the global stage, right? So really, I would say that it was probably kind of like the spring season in terms of China's reforms and economic development. And if I were to quote a poem, I would think of something like 人间四月芳菲尽, right? So everything's doing really well, everything's blossoming, etc. And then basically, you kind of get into the next phase, right? Where things kind of like low-hanging fruits are picked. Obviously, I think as we crossed into the new century, as you talked about enterprise reforms, SOE reforms, here in Hong Kong, we know many different rounds of IPOs, right? So I remember back in like late 90s, it was oil companies first, and then, you had the telcos, and then eventually you had the banks, you have the insurance companies. Those of us on the sell side and buy side, dealt with countless IPOs during that whole decade, and lots of investment and renewals, etc. Can you talk a little bit more, however, about what happens after that, right? Like when the low-hanging fruits are picked and things get a little bit harder, right? And suddenly you start to feel some constraints to that growth and things that you need to start to balance versus just reform and growth previously.
Yeah, sure. I think the early to mid 90s reform really unleashed a lot of vitality in the economy, but the reforms were not complete. There were no massive, privatization, and the SOE reforms really gave them a lot of incentives to invest. And the commercial banks were set up, but they were not functioning as true commercial banks. And so they were lending aggressively, but there's not a lot of risk management. So by the late 90s, then you had SOEs were making losses, banks were insolvent, and also at the same time, the government during that time was also commercializing a lot of activities, including social responsibilities. So you had a big increase of inequality, and then you had the environment getting really, degraded. So by the turn of the century, you had a lot of challenges. So this is when the bank restructuring, SOE restructuring started to take place, and there were difficult times, right? That's around the time when the first round of people predicted China's collapse. But through very difficult reforms, the bank restructuring, SOE restructuring, where they laid off millions of people, also through joining WTO and housing reform, they were able to get growth going again. So we had another decade of rapid growth. But that kind of growth model driven by debt, by aggressive investment, did not really change much. So just before the global financial crisis, Premier Wen Jiabao was talking about, in 2007, when China's growth was at 14%, he mentioned that China's growth was uncoordinated, unbalanced, unsustainable, right? So when people talk about, well, China's growth model has run to its end, yes, the authorities already knew this was not sustainable, and people keep warning them also that this is not sustainable, and so now this is where we are. A lot of the issues that was accumulated that have not yet been fully tackled are still, having its impact today.
So, I mean, there were definitely, phases where growth was a bit better and they were able to tackle some of these structural problems, right? But then after a while, then, you have a cyclical slowdown, and then perhaps some of these challenges would kind of resurface and maybe had to be put aside for some period of time. I do recall that throughout the last, decade or so, there has been many different episodes, and sometimes it was a really challenging time that kind of prompted there to be some very aggressive action, right? So, for example, like back during the deflation period in like 2014 through 16, when everything was going down, massive overcapacity, then the government finally suddenly launched supply-side reform, which was like a complete surprise and helped to get rid of a lot of the overcapacity in the economy. But also similarly, we had a lot of kind of two steps forward, one step back action for other parts of the economy as well. So, looking at a lot of the roads traveled in the last like 10 years or so, which issues do you think structurally have been, I wouldn't say resolved, but kind of largely managed and pretty well? And what do you think are some of the remaining kind of really difficult to chew on bones, the 硬骨头, right, to continue to deal with?
So one of the key challenges that we have not made a lot of progress in the last 10, 15 years is the state-owned enterprise reform. Back in 2012, in 2013, when the government had the third plenum of the 18th Party Congress, they talked about having the state, having the market playing a principal role, a dominant role in resource allocation, SOE reform, and so on. Unfortunately, there has not been a lot of progress on that. And on the debt issue, there has been progress and backtracking. So there were reforms on the local government debt in 2014 and 15, and that was supposed to be the last free lunch. Now here we are today, local government debt are double the size or more than where we were. That's because some fundamental issues about the government's role in the economy. They're still actively investing, and the SOEs are not reformed. Those things have not changed, and their KPI have not changed. So therefore, those issues, even though it looks like you made a progress, made a step forward, but in the end, I think the fundamental issues are still there. And the government has recognized the problem of focusing too much on property, so they try to move away from it. But when the property downturn occurred last time in 2014-15, they worried about the negative consequences, stepped in with massive bailout, and then that led to some developers taking even more risk, and more build happened, the prices went up even further. So now again, we have the deep property downturn to deal with. So some of those areas are back and forth. Areas where there has been more notable progress in one direction is on the social protection and the safety net. So since the late 2000s, so 2008 and 9 or so, China has set up the rural and urban pension system and healthcare insurance system. the coverage are still relatively rudimentary, but it has been really widened. So that has contributed to improvement in household consumption and in the confidence of lower middle class of people, which is not easily recognized by investors because we tend to invest in companies and more related to the upper middle class and the urban elite, but those things have been happening, and if you look at the macro number, there has been improvement. It's not enough, of course. Same with hukou reform, there has been general progress, but again, not sufficient. There's still quite a bit of overhang in those issues.
Yeah, I mean, I think there's a lot of skepticism now regarding the progress of reforms, but to be frank, if I think back to like 2013, right, when the current leadership first came into power, I remember very clearly that all the discussion was about, the sandstorms and the, pollution in Beijing, right? You can't go there during most months of the year because you could barely breathe, right? So obviously they've done significant amounts of improvement in those types of areas as well. And, anti-corruption was obviously a huge priority back then as well. Problem not completely resolved, but certainly the efficiency seems to have improved to some extent as well. I think those types of things we can feel in our everyday lives. But generally speaking, I think, the concern is that over the last decade plus, every time you have a cyclical slowdown, you kind of go back to the same model, right? And the model is basically you ramp up a bit more in terms of government spending and infrastructure investment, which obviously relies on property, land sales revenue for the local government. It also relies on the local government financing vehicles and some of these unconventional fiscal sources of revenue. And then, basically, so infrastructure, you've got property, FAI, and the entire supply chain there. You've got, exports, which is less up to China and more based on global demand, but, ramp up some in terms of monetary policy on M2 and total social financing growth, maybe cut your interest rate, cut your RR. But generally speaking, because consumption is difficult to stimulate within a very short period of time, it's kind of like the same old game in terms of, infrastructure and property and investment to a large extent, right? But I think now people feel very worried because, a lot of these capacities or a lot of these options have been somewhat exhausted, and people feel like, well, what's next, right? So to some extent, is it a cyclical downturn? Is it a structural downturn? And in order for us to overcome this cyclical challenge, do we have to backtrack on some of the structural improvements that the government has made? Those are some of the things that seem to be the very significant challenges that people are thinking about today. So some people basically, wonder whether there is any kind of way out of this. What's your view on whether we can break out of this model?
That's a very difficult question, but I think the current economic woes are caused by both cyclical and structural issues. So some of the structural problems about over-reliance on property, about over-reliance on government spending and infrastructure and investment, about the relatively strong role the state plays and the SOE plays, and the recent tightening of regulations on the private sector and so on. These are some of the structural issues, and of course aging population and so on. But cyclically, there in the property downturn, the property policy tightening combined with zero COVID policy for 3 years, I think are also important reasons behind that downturn. So even the property downturn has both structural and cyclical element. And so removal of purchase restrictions and easing of property policies can help release some pent-up demand and can help stabilize the situation, although it cannot reverse the trend and move property back to the peak level. So that's not going to happen, but at least it can stabilize. Then on local government debt, also I think the previous growth model of land sales and land finance fueled investment model is also behind us. if we think the property peak is behind us. And so local governments will not be able to have as much resources and as much ability to generate the kind of growth we have seen. That's also behind us. But at the same time, I think we also need to, at this moment, probably the government can and should give them some credit support to break out of this impasse of fiscal difficulties where local government have to resort in cutting people's wages and not paying companies and so on. That's not very helpful for the general economy. So the answer, I guess, is that yes, I think we don't need to see the economy continue to slow, but at the same time, we need to recognize there are structural issues to deal with. So China's rapid growth period is probably behind. We have to contend with a more modest growth. In my own assessment, this decade can still be above 4% on average, even though it's going down a bit more. Yeah.
So if I look at like the local government financing structures, right? So previously it was a bunch of backdoor financing, right? So entities that were not officially part of the government just setting up a vehicle and then, getting financed. And then, as you mentioned, some years ago, there was a cleanup effort and it was kind of more like open the front door and start to issue some bonds by some of these local governments officially. But in reality, you're still basically funding these 10, 20-year infrastructure projects, some of which have unclear cash flow outlook with, shorter term duration mismatch type of financing, right? So I guess it's not a surprise that you have this cyclical slowdown that prompts some of the governments to be unable to service their debt, especially given the fact that the government is simultaneously hitting the brakes pretty hard in terms of property sales, et cetera. So, how do you see this playing out in the coming months? Is there like a solution? Is it setting up like a national vehicle, or is it bringing the debt up to central government level, or, how do you see a way out of this?
Yeah, so I think eventually what you have suggested of bringing to the central level or setting up special vehicle probably will all play a role in resolving the local government debt issue. But at the moment, I think we probably won't see that coming very quickly because it involves fiscal issues is always a redistributional issue, which means it's code word for being very political. Political within local government, within the government, between local governments and central government, lower levels of local governments, higher levels of local government, rich regions and poor regions, and so on and so forth. So that's just way to say that's very difficult to come up with a holistic solution. As you mentioned, the central government acknowledged those implicit debt by local government companies in 2014. They had a debt swap, and they were supposed to close the back door, but back door wasn't closed, and now we have a lot of implicit debt again. So there's a huge moral hazard issue. So what is the short-term solution? The short-term solution in China, then we go back to basically where are the debt held? Who holds the debt? The debt are held at banks by and large, and banks have a lot of liquidity. Because China has very high savings, there are very few investment channels, and you have capital controls. So those savings are at banks mostly as deposit. So and the banks are owned by the government by and large. So the short-term solution is local governments and those companies will negotiate with banks and say, extend our loans, give us some extra money so we can pretend we're paying you interest payment, and so you are not labeling us NPLs. Banks will have the incentive to do that because if they label those NPLs, they will have to write off their capital, they will making losses and so on. So it's a modeling through and de facto restructuring for the time being. I think over time, I think the central government will pressure local governments to sell some of their assets. They do have assets. Local governments also have SOEs that they own. They, of course, cannot sell all of them. There's a fair market value issue and so on. But there are assets. I think gradually some of the assets will be divested. And also, eventually, I think some portion of that debt may be recognized by government as government debt as well. But those are going to be more longer-term solution. But with that understanding, I think it means that we are not going to see sort of local government debt cost debt crisis or financial crisis with large amount of defaults. So there's a lot going to be just restructuring, extend the loans and so on.
Yeah, so I mean, one of the key things is, you know, a lot of people, even 10 plus years ago, thought that a lot of this stuff was not going to be sustainable and that things were going to crash far, you know, many years ago. But amazingly, despite the fact that we've been talking about these topics for over a decade, it seems like things still haven't necessarily crashed, right? So I guess it's because China has all these very unusual and unique characteristics that may not exist elsewhere, like these assets or the fact that the state-owned banks can do certain things, or the government can direct certain reforms to happen at will when necessary. Of course, however, sometimes it's not necessarily the case that the reforms happen in a timely manner. So perhaps you have to get to some levels of extreme pain to actually see these reforms come to fruition. So now we're kind of at one of these pretty difficult periods of time, right? So during the COVID, we had a couple of pretty good years where a lot of other emerging markets and global manufacturing centers were shut down, and China, you know, managed the COVID very well in the beginning and gained a lot of share actually in terms of exports, and the economy was doing very well, and everybody was, you know, patting themselves on the back for the superior system and the superior structure that was able to take China through this economic crisis or this global health crisis. But now it seems like things have very much reversed, right? So everywhere else has reopened earlier and the economies are buoyant. And now because of geopolitics and decoupling, you see the meaningful cyclical slowdown, and people don't know what's going to happen next, whether it's a cyclical stimulus or a structural thing or whatnot. You know, to quote, you know, another poem, you know, it's basically Li Bai, basically people saying 行路难,行路难,长风波浪会有时, right? Like what is going to be the next thing to help us to overcome this very difficult point in time? So we talked a bit about local government financing vehicles, but the very important other topic here is what's going to happen on private enterprise and property. So do you think that the government will be able to lift the economy out of the current doldrums in terms of the cyclical aspect without too much going backwards on the structural improvements that they've made in these areas?
Again, very difficult question to answer. If I can summarize some of the experience or lessons of China in the past few decades, but also in the past decade, that China defied the predictions of collapse and doom since 2000 or so. One thing is that Chinese government has been adaptive, and they responded to the challenges. So they first released all the market forces, then they see problems, they restructured banks and so on. Then they had you reminded me very well about the pollution and energy issues. They reformed in those areas and the social stability issues, and so they increased spending there. So that's the key strength of the system was adaptation, pragmatism, right? Here at this point, I think a lot of people start to have doubts that does the Chinese government still have that? You know, has now the worries of national security trumpeted other concerns? Have the government become more political? For example, in the handling of COVID. I mean, in the beginning it was a success. Did we not adapt soon enough? Last year. And would that be translated in other economic policy making going forward? I think that is a question not easily answered at this moment. I still think that the authorities will continue to be pragmatic, maybe slightly different from before, because they do still care about growth. They still do care about stability, which includes economic and social stability. And so in that general framework, when property downturn, even though their starting point is about bringing down property leverage, bringing down risk associated with property and maybe hopefully property prices and so on. But when they recognized that the property downturn was threatening the stability of the financial system and threatening to bring down the whole economy, late last year, they changed their tactic. They start to ease on property, maybe not soon enough and not aggressive enough throughout this year. But the Politburo meeting recently in July again re-emphasized that, and now we see more property policy easing. So even though they understand it's a structural issue they have to deal with, but they are also starting to adapt and try to stabilize that market. Same with the COVID policy, right? They were very insistent and suddenly realized, okay, we need to open up and deal with it as well. So I'm hopeful that they will come up with pragmatic policies rather than being too hung up on this is a structural issue, we must not do that, or we will go back to the old way, to find somewhere in the middle to stabilize the economy. On the structural issues, that's harder, not necessarily because that the government is just, having moved in one way or another, ideological wise. I think it's just that, as Helen mentioned, a lot of the low-hanging fruits have already been plucked. Whatever lays ahead are very difficult ones. SOE reform is one example. Hukou reform is another example. Hukou reform may seem very innocent. Well, give the migrant workers more benefit and more flexibility and so on. But you forget, allowing more migrants to a city where the existing population enjoyed their benefit, the existing population were not like that. And they are quite powerful. And so the government has to tread quite carefully and only do it very slowly as well. On the private side, private enterprise side, I think this is an area that I think the government can actually try to boost the confidence there. They have already started recently by assuring the private sector of their support and trying to boost investment. But I think the private sector probably remains skeptical. They want to see actual specific policy. For example, lower the entry barriers and have more legal protection of the property rights. And also curtail the monopoly power of SOEs and so on. So you need to see the action for people to actually believe it. And instead of being very, politically, today you support me, tomorrow you may not, and that's not very confidence boosting. So that's an area that even if we don't see major SOE privatization, if they can curtail the SOE's power and reduce the government intervention, at the same time increase the role of the private sector by allowing greater entry. It's not really about favorite tax or lower interest rate. It's really more fundamental. I think the entry barrier, like access and those kind of things, I think, and safety, that is the private sector is looking for. I think this is an area that they need to work on that can help boost confidence and private sector investment in the future.
Yeah, so it's about adapting to the environment and then executing, right? So I do think that, as you mentioned, since end of last year, people do see that there is a pretty big pivot in terms of the policy direction. But unlike the COVID zero policy, where you can lift it pretty much instantaneously over a space of a couple of weeks, a lot of these other policies will take time to see the effect. So people are still indeed very skeptical. I'd like to see if people in the audience have any questions for Tao at this moment. We can talk about book specific or anything general.
Thank you very much. Back in 2014, another reform discussed was local taxation, introducing some form, whether it's property tax or more fundamental. First of all, I haven't heard anything since then, but do you think it would actually help the structural problems? And if so, do you think it will ever be introduced?
Thank you. I think in principle, some form of tax reform and redistribution of local sources of revenue versus central will be helpful. However, property tax is very difficult. There faces a huge amount of resistance, and property tax will never be able to replace land sales, because land sales is an asset sale, supposed to be one-off, right? And so in reality, those kind of reform was never going to be able to help balance their gap, financing gap in the local government. But I think fundamentally, because of the incentive structure, I believe that local governments, no matter how much revenue you give them, they will never have enough to spend. Because of the lack of accountability and because of the KPI, they are always expected to stabilize the economy at all costs. So I think it needs to fundamentally change that role that the governments play. So in other words, I don't expect a property tax to come out anytime soon. If it does come out, it will be a very minimum tax that will hardly, make a dent into that gap. Arguably, the most important tax reform should be personal income tax reform, because very few people actually pay personal income. Probably, some of them are sitting here. So it's really a salary tax. It's a salary tax, right? The rich people pay very little, and rural people don't pay income tax and so on. So less than 10% of the population pay income tax. Income tax is 1.5% of GDP. Yet everybody complains there's too much tax. So is there a political, popular way to increase tax, personal income tax? No way. Even the third plenum of 10 years ago didn't talk about it.
Negligible contribution.
Yeah, so therefore, it's not going to happen. And so therefore, I think the way is that the government will be forced to play a smaller role instead of raising more taxes. It's not what they plan to, but they will be forced to probably do that.
In fact, I remember Shanghai and Chongqing had a property trial many years ago, not very punitive.
Still
and actually,
going on, but
but they actually just paused it as well. So even the trial is on pause. So I guess that means the formal one is not coming soon.
Yeah.
Well, first of all, thank you for the most insightful overview. Now, you mentioned that the government has been adaptive, but it's been very clear during the past 2 years or so that a lot of the problems remain, and the old kits do not seem to work anymore. So do you subscribe to the view that China's rise is peak? It's never going to overtake the United States? And if not, what new drivers of growth do you see happening in face of worsening demographics? And then a lot of the young people, university graduates, do not have the jobs they can handle. So all these are very serious problems. So do you see any new drivers of growth happening that would, give a lie to the rhetoric that China's growth has peaked?
That's excellent question. So I don't think China's growth has peaked. I also don't think China's rise has peaked. So China's rapid growth has peaked in the sense that we're not going to see 10% growth or 8% growth, or I'm predicting 4+% in this decade. So growth is slowing down, but 4% growth is still faster than what anybody would predict for growth of the U.S. in the next decade on average. So China is still catching up, right? There's a lot of challenges, as you say, and these kind of challenges and this kind of structural change, the decline in working age population, the excess capacity, the technology restrictions will be hurting China and so on. All of these things necessarily means lower potential growth in China. But the reason I'm still relatively constructive is, I think, despite the fact that China's population is shrinking, working age population is shrinking, but as you mentioned, China today faces high unemployment problem. We are not facing the problem of running out of people to work, right? So the population demographic challenge is a very big long-term challenge, but the challenge is not the binding our growth right now. And so there's still surplus labor to be transferred outside of rural area. Urbanization is not complete. That's in terms of, there's more people to work, but also there's more areas of productive investment to be made. Because China today, at per capita GDP, 17% of US level, not like in Japan in 1990, it was about 100%. In PPP terms, comparable terms, it's 80+% of the US, and China is nowhere near that. What does that mean? That means China's productivity level per worker is still low. And if we look at China's industrial structure, what we produce, what we export, despite all the rapid gains and major achievement, we are still in a lot of times at the low middle end. We can still invest and upgrade our industry and our value chain. That means China can still invest to be productive. The investment can be productive instead of building bridges to nowhere. We can still have those. So potential-wise, I see those are the drivers, right? That could mean more automation being applied, more robotics, digital economy, improving the productivity in the services side. And also we still have the green transition. China's economy today is quite brown, and we need to move to that green, greener production and greener lifestyle for the sustainability of the economy of the country itself. So all of these, I think, will be the drivers in the future if we think about the next decade or beyond. So I see. Of course, it's not easily made. It's not like before. You open a factory and that's good enough. Now you have to see where's the areas you need to allocate. It's not property. It's not government. It needs to rely increasingly on private sector, on the corporate, on the market forces.
Well, thank you. Thank you for sharing the two economists sharing your view. If you were advise Premier Li Qiang, what are your three pieces of advice to him right now?
If I were to advise him, I would say that forget about the Chinese medicine analogy. I have so many people telling me that you need to do slow change and structural change. I would say first stabilize the patient, meaning that you need to stabilize the property sector. You need to give some fiscal support to the economy, including to the household, preferably. Household has been hurt by 3 years of zero COVID policy. So that's one. Secondly, I would say, about the private sector, if you want to boost confidence, implement concrete measures to boost their confidence. And then third thing I would say is have a framework to at least to have a plan and framework to solve the local government fiscal challenges, because right now the impasse is really choking off growth at the moment.
But Tao, I mean, you're talking about basically doing some kind of open heart surgery on the patient. You want to stabilize the patient, then start to do all of these, changes, right? But like the window is open, there's like a big gust of wind blowing in, which is all the geopolitical headwinds that might actually hurt your patient or blow some of the instruments away. So what do you do about that? What would you suggest to Li Qiang to do about that?
Well, on the geopolitical side, I think the external environment is, there's not a lot China can do. There is still something China can do, I would say, win as many friends as possible. Maybe there are certain countries or economies will, see you as rivals, but try to have the unified front, right? 统一战线. Try to stay open. Try to be unilaterally open. You don't have to be reciprocal on the, when other people want to decouple from you, you don't have to say, I also want to decouple with you. You say, no, I want to open. And China has been showing some of that, but I think, continue to do that. But I think at the moment, though, the biggest issue China is facing is domestic. Despite the geopolitical tension and so on, those challenges in the long term will persist. I don't really see major improvement going forward. However, solve your own problem, and then you yourself will be able to deal with those external challenges much better.
So get into a position of strength, right?
Getting
so right
into a
now,
position of
basically,
strength, yeah.
the U.S. is economically very, very strong and really, trying to decouple from China in a pretty significant way. And China is kind of in a weaker position. So I guess try to get the patient to be able to sit up and walk and run first, and then see how to deal with some of the external factors.
Yes, I think focus on stabilizing the domestic issues, but at the same time trying to mitigate external challenges by staying open, by making more friends, and yeah.
Okay. Other questions?
Hi, thank you. It's great to see the two of you bring Bloomberg level interviews come to life, so thank you. My question is, you kind of touched on a little bit about the parallel between China and Japan in the 1990s. I understand you mentioned the point about PPP, how that's different. I'm wondering, Japan has made a major comeback, especially this year. What are some sort of takeaways we can have from the Japan case study, if we may? And what are some pitfalls that China might be able to avoid or learn from? Thank you so much.
I think if we look at, so China and Japan has a lot of similarities, but also some differences. The biggest difference is per capita GDP. It's basically the stage of development, which means China has more potential to grow out of the debt problem than Japan did back then. But also China's economy arguably is much more open now compared to Japan 30 plus years ago. And China also had experience in the 90s to do major restructuring, very painful restructuring. So these are some of the differences. If we can learn lessons from Japan, which I think there are lots of lessons, good and bad, from Japan that China can learn. One is when Japan and European debt crisis and US GFC and so on, one is that you still need to stabilize the patient. You don't focus just on the structural issues. You need to give fiscal and decisive fiscal and monetary policy support at the most urgent times. So that's one. Secondly, Japan's lesson is also that you need to do structural reforms. Stimulus alone is only going to get your debt from 50% of GDP to 300% of GDP, and with 30 years stagnation. So you do need to do structural reforms and relatively early on, and acknowledge the problems and do debt restructuring early on. Japan was not that early, so that you can see from my implications. So China needs to do that as well. So those are the, I think, two important lessons. So you need to do decisive stimulus, but at the same time, you also need to do early on, recognize the debt issues and do structural reforms that's necessary to put the long-term path and growth on the higher path.
I just try to retouch upon the aging population and high unemployment rate in China. Roughly 25% of Chinese population is above 60 years old, and now we have 20+% of unemployment rate among the younger working forces. And the government still promote AI and the robotic, try to improve the productivity and efficiencies. So I think there's a huge contradiction between aging population and high employment rate versus high unemployment rate versus AI and high productivity promotion. So how, as a supposed advisor to the government, the policymakers, what are the solutions we can come out in next, say, year or two? Thank you.
I don't think we can come up with solutions in a year or two. So let's set aside, so aging population and high youth unemployment. So as I mentioned, aging population is a structural challenge that's been coming in decade and will continue in the decades to come. It's a very slow moving train with a lot of challenges still coming. But at the moment, the high youth unemployment has both cyclical and structural elements. The cyclical part is that the economy is running below potential growth, is very weak, especially the services sector that's been hit very hard by both the pandemic and by some regulatory tightening earlier, and which were going to take a lot of the young people. There is also, so that cyclical part should improve as the economy stabilizes and improve. But there's also a structural element, which is structural mismatch between the supply of labor and demand of labor, right? So a lot of the young people are unemployed not because they couldn't find any job, it's because they couldn't find the desired job. China has graduated 11.5 million college students this year. The economy, you know, what is the jobs that are, you know, really, a lot of them are available. Those are delivery drivers, right? And there are some also assembly line workers. But the college graduates wouldn't want to work in either of those jobs. So there's mismatch, which is not easy to resolve. I think the government needs to focus more on vocational training, need to work with the corporate side to see what kind of people they train and provide to the labor market, instead of just everybody has a college degree but not a lot of skills and not, you know, able to work in areas that there's actual demand. So that's a challenge not easily resolved.
So I guess maybe the contradiction is like, if you think about it structurally, the question is, you know, you have aging population and then you have AI and productivity improvement. These are both structural things that are long-term and not going to change. So these things should hopefully offset each other. And then the youth unemployment is more of a cyclical factor, which may be very bad today, but hopefully will not be that bad in the upcycle.
Yeah, well, yes, will not be that bad, but there will still be an issue. But the AI, I think, you know, that is a challenge that's going to be faced by every country, not just China. And that's technological progress. You cannot say, I have an aging population, I'm not going to go there. Because whether you want it or not, globally people are going there. You need to catch up with that productivity gains, right? And so it will have consequences, potentially that some of the middle class jobs will be hollowing out. And so what do we do? I think that's a challenge facing every society.
Maybe just one last question.
Thank you very much, Tao, and hello, Helen. I'm also from the sell-side research industry, but and at the same time a reader of your book. So thank you also for bringing this lively discussion, which make my further reading journey much more pleasant. Suggest everybody to purchase one. Amazon has a discount.
Thank you.
The question goes to your view on the capital account control. How much of a pressure do you see right now, given, of course, expectations of potential slowing growth and much higher US rate environment right now, and among the sort of impossible trinity between the rates, the FX, and the capital account control, how do you think China would balance it out? Thank you.
Thank you. Yeah, I think there is a lot of pressure, but it's not easy to measure. Just the fact that there are, you know, lines outside of HSBC and AIA, and you can see there are a lot of people wanting to bring their money out, and also some private sector people may worry about, you know, the safety of their assets. Of course, there's also investment opportunities. Interest rates outside of China is much higher. There are a lot of reasons for why there is a lot of demand for capital outflow. But as of now, from the market responses and the fact that the PBC hasn't really intervened that much with real money and so on, that means the capital control has been largely effective. At least being able to control the large kind of outflows. We are not seeing anything like 2015-16. Going forward, I think in terms of exchange rate flexibility, monetary policy, and capital account in that impossible trinity. So what is going to give? I think capital control will remain. That's my bet. And my bet has been, I have been following China for decades. I still remember the days when they set 2000 as the time of full convertibility. Then Asia financial crisis happened. Then global financial crisis happened. Each time those crises happened, China congratulated itself for not opening the capital account. And now we talked a lot about the debt problem. We talked about the demand for outflows and so on. So and we talk a little bit about the geopolitical tension and so on. So that means in this kind of environment, China wants to keep the liquidity at home and does not want to be exposing yourself to a lot of international vulnerabilities. So capital control will remain, which incidentally also means that Shanghai will not be able to challenge the position of Hong Kong as the international financial center in the foreseeable future. So actually, Hong Kong has a even increased role to play in the future. And I think also because the Chinese government, when I talk about the impossible trinity, do care about stability of the exchange rate, even though economically you can argue a depreciation can help boost exports and support the economy. But I think the government cares a lot more about the confidence side and financial stability side affiliated with a stable currency than the effect of whatever potential export it can boost.
Yeah, imagine, I mean, if there was no control at the moment that we have. I mean, with the US interest rate where it is and where China's rates are at the moment, I'm quite confident that there will be a significant outflow, much more than what we're seeing at the moment. And probably the currency will not be a 7 handle, right?
Right. Yeah.
Well, I think we've taken quite a lot of questions, and an hour has flown by very, very quickly. There's still plenty of other questions for Tao, which we can take, I think, in the cocktail and reception. But just to wrap up, I mean, Tao, I think what really left me with a deep impression in the book is just that all the focus on one, there is really no clear model, right, for China. The whole path has been unprecedented, incredibly unique, and just very surprising, right? Many things that you would not have anticipated. But two, that the whole approach has been very pragmatic and adaptive, as you mentioned, right? To maintain the stability, to deal with the challenges, and hopefully that pragmatic and adaptive approach can continue to play out in terms of supporting China's overall economic environment and prolong the growth and prolong the sustainability. I mentioned at the beginning that it's always kind of extremes, right? So people see the positive side, people see the negative side. At the moment, I really feel like people pretty much just see the negative side and don't see a lot of the positive side. Maybe to borrow your analogy, it's because the patient's basically on the operating table and needs to be stabilized before anything else is done. So, but having both looked at the market for multiple decades, so we do remember a lot of very, very risky moments like today, and then somehow we come out of it suddenly 6 months, 12 months, 24 months later, and we look back and suddenly China's like all in vogue again, and everybody's on the opposite extreme and saying this is a great growth market and so on and so forth. So hopefully this is the maximum point of pessimism. Certainly the media, the sell side, the markets, everything we look at on a daily basis seem to suggest that we're at an extreme. But hopefully we will come to a point where hopefully we can get to 山重水复疑无路，柳暗花明又一村. So another better upturn.
Yes.
So with that, we look forward to the next phase of the development. I look forward to learning a lot more from Tao personally and professionally. I'm sure you guys all do as well. And we look forward to Tao's next book.
Wow.
No pressure.
Thank you so much. Thank you very much. I think books are available and drinks are available. But we exit somewhere, I think Holly will. Okay, Holly will direct us.
Thank you so much, everyone, and thank you, Tao.
Thank you, Tao and Helen, for the very thought-provoking discussion, and thank you, members of the audience, for your excellent questions, which will most definitely lead to more discourse and more thinking. With 1.4 billion people and the second largest economy in the world, China will continue to be closely observed, monitored, analyzed, understood, and misunderstood. Conversations like what we just witnessed play a very critical role in fostering insight and informing and educating us. If you enjoyed and valued tonight's program, please join Asia Society as a member for access to a wide variety of events that are designed and curated specifically with hopes of shaping a prosperous, sustainable, and secure future for all of us. As we close, may I invite you all to join us in the Li Kuo Wei room for drinks. Thank you very much again, and good night.